the market would shift from regional to metro more, or do you think that, there would be enough activity in basically both the markets for people to, catch the short-term growth?
It depends on the price point. So low price point, definitely see, growth in regional areas, and that's just because that's where those price points actually exist, right? They don't exist in greater city regions.
Hello and welcome to Helpmebuy Property Podcast. This is the last episode of the 3-part series with Alex from #. We are talking about macroeconomic factors at play, the areas where the prices have rising fast, and it's going to continue to rise. In 2024, we are going to do a state-by-state analysis for each pockets where we are going to see the strongest and the fastest price rises in 2024. Now, this is the last episode where we are going to a lot more detail about Melbourne, Sydney, and Adelaide and its regional pockets. If you haven't listened to the last 2 episodes, I will strongly suggest you go back and listen to our analysis around Perth and the Queensland markets. Please do comment in. Stay tuned till the very end because there are some really golden nuggets that Alex shares at the very end. Thank you for listening to us today. Stay tuned. Moving on, so we've talked about 2 states. We are now moving into Adelaide. And so let's kick off on Adelaide and what are the pockets. Now, Adelaide was definitely a high performer for 22 and still made to the list of 3 in 23. And so let's look at Adelaide and see what Adelaide is going to do in 24 and what are the key areas that Alex thinks or we think that should be performing in 2024.
Sure. So let's maybe zoom out a little bit and look at the countrywide trends at the state level. So I have another graph in front of me, which essentially shows all the LGAs, all the states, all the LGAs, all the suburbs within those LGAs in one heat map. We've been speaking about Western Australia. As you can see, there's a lot of green here, which means there's the highest growth happening this year. Again, whether it is going to continue or die off will be determined by a lot of other indicators that we'll look at in a moment. But if we compare that to South Australia, which is on the right, there's quite a bit of green in South Australia as well, especially regional, say. So one LGA that stands out within Greater Adelaide is Playford. You see there's quite green here. And we're going to need to zoom into the regional SA, which is, by the way, a lot smaller market when you compare it to Greater Adelaide, to understand which LGAs are likely to form there. Now, since we're looking at this heat map, you'll also notice that there are states that are in the red. So there's been slight price declines in those states. Tasmania stands out. So Greater Home is showing a bit of decline there in the year-on-year price growth. Regional New South Wales, some areas also quite red, for example, Byron and Ballina. When we move and look at Greater Sydney, Central Coast and Blue Mountains showing signs of decline, whereas Parramatta is booming in Sydney. And this was very surprising to me when I was looking at the data the other day. It'll be interesting to maybe deep dive into that, understand why it's outperforming all the other LGAs in Sydney stage. We're looking just at the houses data, just a reminder.
That's a really nice graph. I really like the way a single snapshot of all the LGAs, and I think it points out quite aggressively. Like I think the city of Playford, the city of Salisbury, and the T3 Gully, the city of T3 Gully, typically those are the 3 that really stands out for me in Adelaide as well, where there is a lot of growth opportunities at a very smaller price point. So yes, and again, I think regional parts of SA are something that are to watch out for as well. There are pockets around Secret Harbour and some of those areas, even Mount Gambier to some extent is doing quite well as well, and those are the areas to definitely watch out for. From a local perspective, for people to understand that a lot of owner-occupier activity is happening in Salisbury and Playford Council, where people have been priced out from the south of Adelaide, and so naturally the only place that they can go and buy at 600 price point is typically around those areas. We're talking about brand new houses. Everything else is selling well over 750, 800, and understand that Adelaide cutoff for owner occupiers is around 650, and so those are the 2 areas that definitely works for them. And so from established property perspective, if you can buy a big block of land at 500 or 550 in some of these areas, then not only you get a development potential, you get a lot of this push from owner occupier pushing the area up quite extensively. So it was an amazing graph.
Absolutely. So it's a dynamic graph that you can open on our portal. Just go to htech.com.au/min, which is markets in the moment. And you can essentially explore all the data that we've been talking about dynamically. You can zoom into any of those markets. So this is Playford, and it shows you like detailed data for suburbs in Playford LGA. So this is a slightly different view to what we've seen on the other dashboard. And it shows you the market size, which is average number of sales in that suburb plus growth and current typical price in that market. It's color-coded by growth, just because it's an important metric, whereas all the data is also available when you're only mouse over one suburb.
Amazing.
To continue our conversation on Adelaide, so I think we can deep dive a little bit into LGA data for Adelaide.
Yeah,
do you want to do that? Cool. So let's do Greater Adelaide. So again, we're going to use the same approach. Let's look at short-term demand first, and then we can also look at other data as well. So Adelaide is actually pretty good. And when you look at days on market, I don't see days on market that low in other states and other capital cities. So we've got 15 in Walkerville, then 1721 in Marion and Charles Sturt, and they begin to kind of ramp up a little bit. But as you can see, they're all color-coded green, which means they're in a favorable range. So definitely a lot of demand in the markets that you see on the screen right now. So all top 10 are pretty good. If we overlay that with supply side of the equation, you can see the stock and market inventory also all in green. And if you compare that to the other states we looked at, if you recall, there was not that much green in these metrics. There was a mix of orange and green and red sometimes, whereas here, they're like in terms of supply and demand, they really are well positioned for growth based on the supply and demand indicators. Again, we need to relate with other things. So although supply and demand is great in Adelaide, affordability is not so great for those markets, which means locals, it's still harder for locals to afford to buy in those LGAs. Affordability is all red for the top markets that we've highlighted here. And to contrast that with Western Australia and Queensland, affordability was all there in the markets that we looked there. So there's a trade-off on affordability. But if we overlay one additional metric, which is infrastructure spend is excellent in Adelaide LGA, which is the inner city LGA. It's $21,000 per capita, and that's normal for inner city LGAs. Another one that looks great is West Torrens, $3,000 per capita, and Port Adelaide Ironfield, $2,500 per capita spend. So I think, like, if you're researching markets and you have a price point, the first thing to do would obviously be to filter out markets that are above your range, because we have markets here with 1.1 million dollars, so that's a high price point for entry. And if it's below 1 million and around maybe $600,000 to $800,000 range, I'd look at Marion, SA, Campbelltown, Port Adelaide, Enfield, and Adelaide Plains. So that would be the LGAs that can potentially show some short-term growth this year.
And if you reduce the median price point to something smaller, does the story changes a lot, Alex?
Yeah, it does. So let's do $800,000 filter. By the way, we use typical price, which is very different to median price when we calculate price. It's a lot more reliable than medians. And what you'd find is that when you shortlist a suburb based on typical price, and then you go and try and look for properties in that suburb, you're more likely to find properties listed at that price point as opposed to above. And that happens a lot with medians. You pretty much do an analysis, and then you come to a point where you can't find anything for the suburb that you shortlisted. So yeah, this is what comes up on the top for sub $800,000 price points. We have Marion, Port Adelaide, Enfield, Adelaide Plains, and Onkaparinga. I think that's correct. Again, just short-term growth indicators, not long-term buy and hold.
Great. I think this basically comes back to, what we were talking before for you viewers and listeners, right? You can still see Mount Barker, Salisbury, Playford, Okaparinga, some of these areas there. And then you talk about the frills of Adelaide. You talk about Gowler and some of these areas which are further away from the inner part of Adelaide. Of course, Marion is closer to water, and Australia has this massive love for water. And so majority of the water side areas are quite high on value versus Hallett Cove and Marion, which sits at a lower price points of still under $800,000, and that provides a lot more attraction from people buying premium Adelaide price point. And so while short term is great, typically for Marion, my expectation would be that you would see some long term growth coming out of this as well, and that is indicative of the affordability index out of things, where the prices have still kept growing, and it's actually pushing people out of some of these areas too. Cool. That was Adelaide. Thank you very much for sharing this. Now the two major cities, and we have kept the two major cities for the last, which is Melbourne and Sydney. Now I know that there is a lot of investors out there who does not like investing into, I call them non-metro cities. They prefer the likes of Melbourne and they prefer the likes of Adelaide, prefer the likes of Sydney. And so let's kick off with Melbourne and see, of course, the average price point would be slightly higher. But let's see what Melbourne is basically doing in relation to the high level view first, and then let's dive deeper into the LGA side of things, or Victoria typically.
Yeah, so let's look at Melbourne and on this heat map first. So Melbourne is doing a lot better than regional Victoria start of this year. Knox, Manningham, LGAs, and maybe Newbies stand out in terms of growth. There's a couple of pockets with decline. So you can see the rest of Victoria, there's more red. Now let's see.
I think this as well, like some of the data that we are seeing on the ground as well. I'm doing a lot of developments in Nillumbuk myself. So the price points in Nillumbuk is gone quite up, typically because of the Northeast Link project that is coming in there, which is creating a lot of jobs, a lot of opportunities. It's creating the North Corridor to the east of corridor for Melbourne. And so because for Victorians and people who don't live in Melbourne, just to provide them a bit of context, the east is typically the most expensive in Melbourne. And so for people who can't live in east, living in north and getting to east in 20 minutes basically provides the best opportunity. And so they might have kids going to school there and they might prefer living in north. And so that's why you're seeing typically a lot of growth. Knox, you talk about Knox, you're talking about areas like Bayswater, Croydon, all of these areas, they've seen significant growth and continue to see a lot of growth because that price point is a very ultimately affordable price point for a lot of people trying to buy properties in some of these east and southeast pockets of Melbourne. And so you can still buy established house of around 800 or 850 in these areas, which is unheard of in typically a lot of east. And then same with Manningham, same with Melton. Some of these councils, although it's in the west, it's something to look out for, from a high level perspective as well. Another one that you would potentially see that is just trickling is the city of Casey. We're talking about areas like Barrick, Cranbourne, Dufton, Endeavour Hills, Hallam. Again, all of these price points sit at around between $600,000 to $800,000, a really attractive price point for people or owner occupiers trying to basically buy properties there, which is basically driving the growth in some of these areas too. So yeah, let's look into a lot more detail. Let's look at some of the granular data and see as to what the story is coming out to be.
Sure. So since we're looking at Melbourne, there's going to be the highest price point is 2.7 mil. And, it may have great supply and demand indicators, but if it's out of your budget, then probably don't want to spend time looking at the data for it. What would you like me to filter on based on typical?
850 or 900. I think that's a good price point for people looking in Melbourne typically.
Okay. So we only have 7 LGAs, and this will be a really straightforward comparison. So they're pretty much in the same ballpark when we look at the demand side of the equation. Now, because we're looking at Melbourne, we see another data point that starts showing up, and it's clearance rates. So before that, we looked at regional markets where clearance rates are simply not a thing because there's not options held in all of those markets, whereas this gives us another data point to compare markets on. And clearance rates are another great short-term growth indicator. So I would actually overlay them with days of market. And I know that they're all in the red, but you got to look at them in comparative terms because we're comparing LGAs within Greater Sydney, and Melton, in my view, does have probably one of the best demand indicators, just if we prioritize clearance rates. If we look at the supply side of the equation, interestingly, Melton also has the highest building approval ratio. So those two would probably cancel each other. I take my words back. So the supply side of the equation cancel the demand side of the equation and revert back to days on market, sort by the lowest, and we'll have Cardinia and Bringbank as well as Casey coming up on the top in terms of short-term capital growth. Casey does have a bit of oversupply risk because of new builds, but that's probably beyond the 1 year horizon because it's based on building approvals, and the lead indicator for that the lead period is about 1 to 2 years for that supply to hit the market. So let's also relate with affordability. Again, Cardinia actually top of the list compared to the other three with 38 years of affordability and also quite high on infrastructure spend. And it's priced at around 850K. So that would be the point of entry to that market.
No, that's very interesting. And again, this is us talking on a really high level. So there are suburbs within suburbs. So please do ensure that you're looking at the next level information as well when you're making any suburb decisions, predominantly in Melbourne, especially if you're looking at owner occupiers and if you're mixing the pockets that you want to really buy in that are going to grow from a short-term and a long-term perspective, then definitely reach out to Alex or myself in order to discuss some of these insights as well in a lot more detail. Last but not the least, let's look at New South Wales. New South Wales is an interesting one because Metro, I always see that a lot of people don't go around investing in Metro typically from a buy and hold perspective unless you are earning like $300,000 or $500,000. The majority of the time, a lot of focus is outskirts of either New South Wales at a much more lower price point. And so let's focus there and see as to what are we seeing in typically New South Wales. What are the areas that are basically standing out?
So New South Wales is an interesting one, you're right, because there's such a huge range of LGAs with different price points that with Melbourne, if we're just in that on Melbourne or Sydney, we can just filter based on the ceiling, which is $900K. Here we also need to apply the floor. So what would you look at? What range do you think we should be focusing on?
I think, let's look at something under, I would say, 650 to give us a good understanding of what areas that we could be looking at.
And the floor, 400, Okay, so we've got 26 LGAs for that price range. And let's see what we're going to get on the top. So top ones actually have dollar of zero. That means that can't be calculated. So I'll discard them. And the next three ones that pop up on the top are Forbes, Griffith, and Oberon. Now, Griffith has lower confidence than the others, but I would still keep it on the list just so we can complete this comparison. They're all great in terms of affordability indices, around 30 or below, and all fives, which is right in the middle, plus supply is actually looking pretty good. So both song percentage and inventory are well within the favorable range. Building approvals are not flaring like we saw in Melbourne and some of the LGAs there. And infrastructure investments. So Griffith, although it has low confidence data, it does show the most infrastructure investment in that market this year. So yeah, it would help to actually deep dive into Griffith. I think it's a smaller market, so it should be okay to just, look at the suburb data in there. But it's also more expensive one when you compare it to Forbes. So Forbes is 450, whereas Griffith is around 600K. Yeah. So those would be the top three. Again, you can continue going down this list because there's 26 markets and they all have varying indicators, but these ones are the ones I would single out at this stage.
Definitely. My personal favorite, of course, there are some there on the list already, typically around Dubbo or Gunnedah. But there are areas like Tamworth, Wagga Wagga, Penrith, which definitely sits right at the top as well. Yeah, I think the price point for Penrith is definitely not articulated there because Penrith sits at around $800,000 price point, and same with the city of Melbourne. So some of these areas, of course, New South Wales is such a massive market. And so Newcastle, and people were always buying in Newcastle and Wollongong, and you've seen some amazing growth coming out of it. I think those markets have hit its maturity now. From a development perspective, you could look at some of these areas around Cessnock, but if you're looking at buy and hold type of properties, then some of these regional pockets are definitely at the right price points in the right areas. So definitely need to look out at some of these and see as to, okay, how much growth is coming out of some of these areas, especially in the short term and the medium term as well.
Definitely. So yeah, another factor here is always important to mention. We're not considering risk. Some of the markets that I highlighted have quite high risk indicators. So yeah, take that into account if you're researching them. And just for a bit of an extra, if you are seeing long-term growth, I sorted by our capital growth indicator, which is a long-term growth indicator, and Griffith does come up on the top. And in terms of risk, it's okay. It's $65,500. So yeah, it would help to do a bit of a deep dive into the data there into suburbs.
Definitely.
Yes.
So coming back to some of the last questions, and so now we're wrapping up all the discussions. I want to basically take this conversation very quickly to the regional versus capital cities. And so if I asked you, Alex, where would the focus be for 2024? Do you think that the market would shift from regional to metro more? Or do you think that, there would be enough activity in basically both the markets for people to catch the short-term growth?
It depends on the price point. So lower price point, we'll definitely see growth in regional areas, and that's just because that's where those price points actually exist, right? They don't exist in greater city regions. So by lower price point, I consider anything in 300 to maybe 500 range. And for markets that are within that range, this quarter, there's potential definitely growth there. But there's always that overlap at a higher price point where you have LGAs, we're capturing LGAs in both regional and capital city markets. I think that's pretty much where it will be determined by the other factors that we look at. So it's hard to answer that question without diving deep into the data.
There is no right or wrong answer. You're right. When it comes to some of these questions, right? Typically, it's very dependent on different states, where some states would see a lot more activity in the regional markets versus metro areas. For example, Sydney, Melbourne, you would see that metro is a lot more pricier, and so affordability indexes are quite low, and so naturally people would be more focused on investing into some of the regional sides of some of these bigger markets. Ultimately, it comes down to investor choice as well, whether they're chasing growth and yield. One thing that I'm quite certain of is that as the news around interest rate drops comes in and the consumer confidence starts coming back and the credibility starts opening up, or credit starts opening up from bank side of things, you would see that people's risk appetite changes more from regional to metro, because naturally there is a much more affluency when it comes to people buying in metro versus regional. So any last words before we wrap it up, Alex? Thank you for coming in today.
No worries. I think you had a question for me. Where would I pick if I had a property? Do you want me to ask that?
If Alex was buying the property today, where would Alex be buying a property?
So I don't know the answer yet, but I'll tell you by just looking at the data. So again, it's a personal question, and you need to consider your strategy and your budget. So I'm going to make an assumption for myself, and I'm going to go with the lower side of the budget, which is 500K. And I'm going to assume I have a long-term investment strategy, so the horizon of 5 years and above. And when you look at the LGA data, that's the only thing that comes up on the top. It's Timor and New South Wales with a price point of $450,000.
If you take it you use the same filter and put it to Australia-wide, would you still select Timora?
Sorry, we're still in New South Wales. Let me just repeat that. Yeah, so there's more now. So my answer now is Mount Gambier, I say, if we look at countrywide data, just because it has the best combination of low risk and capital growth score. I wouldn't actually disagree. I think Horsham and Mount Gambier is something definitely to look out for. We did a lot of buying in both of these pockets over the last sort of 6 to 8 months. And so, there is, from the lookout of it, you would see that there would be a lot of infrastructure spending in some of these pockets as well. The state government is doing a lot of spending in some of these areas. And there is multiple strategies available in some of these pockets too, typically, if you think about it. Horsham being close to Holds Gap is an amazing Airbnb, strategy as well if you really want to play that out. And same with Mount Gambier. Mount Gambier is something in transit between Melbourne and Adelaide. It's an amazing stopover place for people to basically stop over and enjoy. So good picks, Alex. I love it. Very nice. No worries. Cool.
Now, for people who are cashed up and have equity present in their property and been waiting for the market to collapse, I have some good news and some bad news, right? The bad news is that there is no collapse, right? Gone are those days where experts were projecting like a 20% drop in housing. And I don't think that that's the outlook for 2024, right? Those doom and gloom days are over. And so there's a lot more people sitting on the fence line right now. And the good news is that if you want to enter into the market, then typically that time is now. Every buyer out there, I personally feel that you have probably up to September and October before the market starts coming back. You get a lot more positive sentiment coming from RBA, from the bank saying, hey, the interest rate is about to cut. And so you don't want to get into the market where the cut has already happened, because then it's a bloodbath, right? You're competing against people who are cashed up. And so you don't want to typically miss out on another property cycle while you still have a chance. And so if you are contemplating and thinking about buying and have an equity sitting there, then of course reach out to Alex, look at a lot of data, reach out to us, have a bit of a conversation in helping you out, so that you're not basically following the herd and following the market, rather than you're following the leading indicators and making a lot more evidence-based decision. If you have any questions, comments, anything in relation to Alex, please, where can they reach out to you?
That's really easy. So you can reach out to us via either email. So there's an email in the footer if you have a support-related question. We also have a Facebook group, which we allow anyone to join. And there we answer any questions when it comes to suburb analysis or LGA analysis. It's free. We don't charge anything. It's just there to kind of showcase the methodology and approach we use when we research markets. I'll share the links with you after the call, but if you're on the website, you can just click on the Facebook icon here and it will tell you to that.
And look, if you want to reach out to us, with the questions as well, you can reach us out at info@helpmebuy.com.au or marketing@helpmebuy.com.au. And, we can definitely put you in touch with Alex or any questions in relation to the data that we were presenting today. Or if you want to just have a chat about your own personal circumstances, please do reach out. Thank you for tuning in today. Thank you for listening to us. Take care, stay safe, be kind, keep smiling, keep investing. This is Moss and Alex checking out. Adios.